Welcome to Market Update from the Property Podcast. I am Rob D. With Rob B, today is Friday, the 5th of June. And as we said last week, this is going to be our final regular market update. So, Rob, I'm going to ask you for the last time on mic anyway, how are you feeling?
I'm okay, thanks. I'm kind of glad that we're not asking this question on air anymore, because I tend to say similar things each week, that I'm not high, I'm not low, I'm somewhere in the middle. I've had some good days this week and some days not as good, but nothing amazing and nothing awful. It's interesting, in work we have a communication system called Slack, and we have different channels, and those channels have themes. Some are like really serious stuff where lots of work gets done, and some are a bit more lighter. One of the channels that we have, that's been set up specifically during the crisis, is a thought for the day. And Tony, who's referred to as Magic Tony within a company because of the magical things he can do, curates that channel. And in the week, he posted a thought that said, there are people who would love to have your bad days. And that really resonated with me during the week. It was one of the days this week. It was a bit tougher than some of the others. And I remembered that quote. And it's like, you know what? That quote actually is super powerful, not just for the middle of the coronavirus, but generally in life moving forward, because there will be always people who would just adore to have your bad days. And I think if you frame your mindset like that, you can kind of bring yourself back to a middle level of emotion reasonably quite quickly. I think that's a safer place to be emotionally as well. Nice level of contentment, not really high all the time, not really low all the time, but just contentment. And when you find yourself moving one way or another, trying to bring yourself back to that level, a lot harder to do in practice, but quotes like that and things that get you thinking really do help.
Yeah, I think it's really helpful to just have little sayings that you can run through your head at times and just catch yourself before things start to spiral. Another similar one that I've heard that's getting at the same thing is like to ask yourself, would I swap my problems with someone else? Whenever I've asked myself that, the answer is always no. Everyone's always got some kind of challenges, but there's never a case when I would want to swap mine for anyone else's. And that's a nice way of bringing yourself back up and helping you to see the situation in a more rational way as well.
I think it was Ryan Serhant, and if I've got this wrong, it doesn't really matter too much, but I watched the YouTube video of him recently. He's one of the real estate brokers on $1 million listings. It's a bit of a cheesy American show that Rob and I both love. But on his YouTube channel, he said that it's easier to feel sorry for yourself. Like, that's easy to do. Like, you can just default to that position, and it's actually harder work and requires more effort to get you to a more content and level place. And then he goes on to say that you're lazy if you don't do that, and I'm not going to go down that route. But I do think that you do have to work a little bit harder to get to that place of contentment, and it is easier to feel sorry for yourself. But if you use these triggers, these methods of making yourself think and reflect on your current situations, you can switch yourself out of it. As you said, Rob, this is our final market update. So we're going to touch on a bit of the news, but also some of the lessons we've learned over the last few weeks of doing these market updates. But starting off with the news, and something that caught my eye this week was a report from Rightmove. The headline of this report reads, "Lockdown breakups and job changes boost rentals." So that would make sense. You could go, okay, well, lots of people's lives have changed during a lockdown. They may be making big life decisions, and therefore people may want to change their accommodation needs. You look at the beginning of the report and it says, rental inquiries are up 22%. So yeah, all makes sense. It's only when you dig in a bit deeper that you start to think, well, actually, I think this headline is a bit of a stretch, because when you look at how much rental demand dropped by, it's almost identical to the amount it's risen by. So it's just leveled out. There's no more rental demand this year than there was last year overall. It's that it dropped about 23%, and now it's up about 22%. So it's kind of just leveled out. And also, Rob, you said on mic before we started, inquiries don't equate to movement. Lots of people, because they are locked down, will be just dreaming. I do it all the time. The amount of times I've moved in my head on Rightmove is ridiculous.
Yeah, I think this Rightmove data is useful because it's a leading indicator. It's about as early in the process as you can capture a data point, but that does mean that you can't read too much into it, because obviously a lot of people will start thinking, oh, I'm cooped up in this little flat, wouldn't it be nice to move somewhere with a garden? So they'll start looking at that option. It doesn't mean they're actually going to go ahead and do it. But the graph there shows that rental demand is now recovered. It's a little bit higher than it was to start with. Not, like you say, for the reasons listed. I think it's just that all that pent-up demand is coming back and the people who weren't looking before are doing so now. But it's still very much a renter's market at the moment because a lot of people who would have moved have decided not to. And because even though you can view properties now, it is more difficult to do so, and lots of people are nervous about it from a health point of view and don't want to go out and wander around other people's houses unless they have to. The balance of power has still shifted in favour of renters at the moment. From talking to agents and from talking to other landlords and monitoring lots of markets, I've seen that landlords are very willing to take offers at the moment. If they can get a tenant, even if they're accepting a rent lower than they would have done back in February, they're happy to do that because it gets the property filled, and they're pragmatic that the market now is not the same as it was. Maybe by September, October, the market will be back to where it was before, but you don't want to sit with an empty property for that long. And I think that's an entirely sensible position to take. It's far better to be realistic and realise that the market has changed, and it's far better to have someone in at a lower rent than have an empty property while holding out for a higher one. It's a sensible move for landlords. It's great for tenants at the moment if they are looking. But I think that's something that could easily be missed if you just look at this story and you see a graph going upwards and you go, oh, brilliant, demand is back. Demand is back relative to where it was before, but the rental market is certainly not the same today as it was back in February.
It's a big headline, but really not a big story. There's not much happening there. And I think that will be the story of the property market in 2020. Outside of property, a lot has happened. But inside of property, I don't think a lot is going to change. The rest of this year, property prices aren't going to be miles away from where they started at the beginning of the year. And we've talked about the reasons for that, the amount of stimulus propping up the UK economy and the property market, but also that amount of stimulus that's been injected, not weaving its way through to asset prices until at least next year. So if you're looking for something big to happen this year, I think one of the things we've learned by taking our time to process all the information is that the big moves in the property market won't start until next year at the earliest. But Rob, that's one of the things we've learned. If we move on to what have we learned from this crisis, it's giving yourself thinking time. That is really, really valuable.
Definitely. You can't make good decisions in the middle of a panic. You just can't. Listeners have kind of heard us work our way through this almost in real time because we've been doing these weekly updates, and we've also done many episodes of the Property Podcast on a Thursday around this kind of subject, and our thinking has shifted over time, and our thinking, I believe, has ended up in a point where we're more likely to have an accurate view about what's going to happen, and we feel like we've got an understanding of what all the different factors are and how they are going to be weighed against each other, the upside and the downside, how it's going to balance out, and we understand all the factors involved. Back in mid-March, when everything was really starting to kick off and everyone was seriously worried about what was going to happen next, we weren't in that place. And you can tell by going back and listening to the episodes that we weren't in that place. It takes time to read and research and think and work everything through. But also, Rob, like you said, it's time, but I don't think it's just time. It's getting yourself into the right state as well, because it's so hard to think rationally and unemotionally when you are feeling emotional and seriously worried.
Yeah, and this is not just property, this is a life lesson. Like, if you're making big decisions on high emotions, the chances of those decisions being good ones are slim. Taking time to reflect and think about your situation, what you're going to do, how you're going to act, will nearly always lead to you making better decisions. Now, your environment may make you feel that you should make a decision, be very rash, go and do something, but actually, for most people, you're not forced to do that. You may force it upon yourself, but you don't have to do it. Now, unfortunately, some people will have had to have made decisions in this crisis that was forced upon them and they had no choice. And time will tell for those people if they were good decisions or not. But the risk of making a poor decision is greatly enhanced when you feel under pressure, your emotions are heightened. It's just not a good process to go through, but you have to get that awareness that you're feeling that way, which is really difficult to do. Because when you calm down, you can then go, right, actually, I will proceed with that sale, or I will proceed with this plan, or I will make this life decision. And that's slightly different to what I would have made a few weeks ago. So making any financial decision or life decision in the middle of a crisis when you're feeling really emotional about what's going to happen with the world is not good. And I'm really glad that we've taken the time to decide how we feel about everything, from running a business, we didn't make any big rash decisions there, to being investors and everything else that goes on in our own lives. Taking time to make big decisions is nearly always the right approach. Got to be careful you don't go too far and procrastinate. If you are someone who naturally procrastinates, then you can give yourself a deadline. But for a lot of people, and you see the movement in the stock market which shows this, a lot of people are irrational and they'll make very big, quick moves. They'll pull money out. They'll make big investments in. Because the stock market is so liquid, I think it really reflects people's emotions and how they're feeling on any given day. And those huge spikes that we've seen over the last few weeks and months really reflect that. The wisest people who invest in the stock market always talk about the long term, and it's the same in property. Luckily, in property, it's a lot harder to liquidate an asset and suddenly sell overnight. In a way, it's a built-in protection to stop you making poor decisions. But as we've seen over the last few weeks, if people are able to make big decisions quickly, they will. But as we've said, not always a good idea.
No, I think we saw the same thing right back at the very start with mortgage holidays. I think that's another really good example of that. Millions of people rushed to take mortgage holidays before anything had happened. They were meant to be for people who'd been affected by the pandemic, but no one had any time to be affected, but they wanted to do it anyway because there was a need to be doing something. I think there's a psychological need to feel like you're doing whatever you can and to have some kind of control over an uncontrollable situation. And that may have turned out to be a really bad move if lenders do start holding that against investors when it comes to getting future finance. We don't know if that's going to be the case, but there are suggestions that it is. So it may have been a better decision to do nothing. Nothing is a difficult thing to do, but often it's the right thing to do. Something that I'm taking out of this as a real positive is how interested people have been in these market updates and also in the episodes that we've done about economics more generally. There seems to be a real desire from people to understand what's going on. And it's something that I've seen as well. There have been things that have happened over the last few months that I haven't understood because they've never happened in my lifetime before, so I've never had to understand it. So it's prompted me to go off and do some research, and now I understand something that I didn't before, so I've got more knowledge and I'll be able to make better decisions in the future as a result. And I think that's true for a lot of people at the moment, and it's really pleasing to see, because if the right thing to do is nothing, but that's really hard to do, what can you do instead? Well, it's seek to boost your understanding. Instead of taking rash action, go and spend your time learning instead, so you can make better decisions next time round. I think I've personally learned more about economics in the last 3 months than I have done in the last 3 years, because I've been forced to, because things have happened that I haven't understood and I want to understand them. So for me, that's a real positive to come out of this year.
It's been exactly the same for me, Rob. I completely agree. The 3 month to 3 year ratio absolutely applies to me as well. It's these triggers, these events that do get people curious. It was '08 that was a massive turning point in my life because I was already in property and in property investment. But back then, while I may have knew a fair amount about property, I knew next to nothing about the economy and how it works. And that huge world event from an economic point of view just made me so curious. I was like, how has this happened? And it just went on a binge over years. And then as time went on, you kind of feel, well, I've learned a lot. I really understand that subject. I've kind of mastered that. I really get why that happened, and other market cycles and crashes happen. And then this happened, and it's different again. It's like, wow, it sparks like a fire of curiosity. And it's like, I want to know, I want to learn, I want to understand this. I know other people are feeling this way as well. I've been asked more frequently for recommendations on books on economics and related subjects, and that just makes me so happy that people are interested in this subject, because it has this stigma of being boring and dull, but actually it's so important because it affects everything in our lives, from wars to riots to wealth gaps, to why rich get richer, to why asset prices go up. All these things that actually do matter to all of us. If you understand economics, then you can understand why so much in the world actually plays out. So while some people may see it as dull and boring, I see it as exciting and fascinating. But fortunately, so many other people are now as well. And that, as you said, has been a real positive from what we've gone through over the last few months.
Yeah, and we'll continue to put out episodes on some of these big economic themes because we love talking about them and we know they're popular. And we'll also, of course, continue to talk about what happens in the market, because this is our last regular market update, because things just aren't changing week to week in the same way as they were before. We normally record Thursday's property podcast on a Monday, and for a couple of months it's like, we can't do that. We can't wait 4 days because anything could have changed by that point. That pace of change has slowed down, but there's still a lot to be decided. We are still just at the beginning of this, really. So we still don't really know what's going to happen to property prices. We've got our ideas, we've got our theories, but we don't know the magnitude. We don't know the timing. We don't know what's going to happen with the rental market. We don't know what's going to happen with unemployment. We don't know what's going to happen when the courts open and you can evict again and there's rent arrears to work through and all manner of things. There is a lot left to happen, but we will, of course, take you through all of it as it happens. Some of it will take a long time to play out. That's why we're saying that whatever happens, a lot of it won't happen this year, because it's going to take time for everything to play out and for people to work out what's going on. But the one thing we know for sure is that change and uncertainty creates opportunities.
It does. So while we've said in this very podcast that things won't change dramatically in the world of property this year, but because people are waiting and unsure, it does create opportunity. In fact, Rob, you've invested in the last few weeks, and I'm sure people would love to know about that. So luckily, on Thursday, the podcast is going to be dedicated to that very investment that Rob has just made. What's he done and why? We'll find out. And that'll be really interesting. But the point we're making here is that while there's uncertainty and confusion, there are opportunities. So as a property investor, don't sleep through 2020. Actually be more alert than ever, because people are confused and concerned and procrastinating, but there are switched on investors that are making big action and movements. In fact, Rob, we had a launch with Property Hub Invest in the week, and it was the most oversubscribed launch that we've ever had. Now, I think that tells you a lot, that there are definitely a lot of switched on investors at the moment who will strike if the opportunities are there.
Oh yeah, there definitely are. I think it's worth saying, we don't want to get confused. Now is not the time to go off and just take an average deal off the shelf. That is a risky thing to do right now, and it's actually squandering the opportunity. The deal that I made and the other one that Rob just mentioned during the week are outstanding deals that you could only do right now because of the situation as it is. So we're in a fortunate situation to have access to some of the opportunities that are out there right now, but there are going to continue to be into the future as well. As all these changes play out, lots more opportunities will emerge. So when they do, you've got to be ready for them. And for me, that ties together everything that we've talked about today and everything that we've talked about over the last few months, really. The way to prepare yourself for those opportunities, to take advantage when the time comes, whenever that is to get curious, to understand everything that you need to understand, to know what your next move should be and why things are happening the way they are, and to get yourself in the right mindset for making those decisions, not to get bogged down by the day-to-day negativity, which is easy to do at the best of times and particularly at the moment. So for me, it's a combination of those two things. It's understanding what's going on and what's likely to happen next, and making sure that you're mentally in the place that you need to be to not just get through this year, but to use 2020 as a springboard to really go out and achieve big things. And the best way to do that, of course, is to keep on listening to the Property Podcast.
So we've all been through a few crazy weeks and months together now, and hopefully the Friday market update has been a teeny way of us helping you navigate it as well. Of course, the health of your family and friends is the primary concern when we go through anything like this. But then after you've secured that, and hopefully for the vast majority of you listening, you've been able to achieve that, then after that, it's looking ahead and going, okay, well, what's next? And we're going to help you with that, of course, with the podcast. So be alert, keep learning, get very focused on your long-term goals and what's important to you and your family for what you want to achieve financially. And in our own little way, on every Tuesday and Thursday with the podcasts, we'll do our best to get you there. Take care, everyone. Stay safe. Bye-bye.
Bye-bye.